The market may have dodged a bullet for now because on Monday we had a big red candle on the charts. However, if you have a look at the last 6 months, the correction on the Nifty has been extremely short-lived and has been swift. So was Monday, one of those instances, or are we in for a longer drawdown and a more, corrective phase on the charts of the Nifty? Well, one of the indicators that we refer to in technical analysis is moving average convergence divergence, which shows you the relationship between the MACD line as well as the signal line, which are calculated based on 12, 26 and 9 period exponential moving averages. But first, let's have a look at the market profile. What is it suggesting? Like I was telling you that maybe we would have dodged a bullet on Monday because the Nifty has successfully defended the Monday low of 13,131 and also managed to close above its 20-day moving average, which is placed at about 13,343. However, similar is not the case for the Nifty Bank, which bears the highest weightage on the Nifty. That has underperformed for 3 days in a row and is yet to recover above its 20-day moving average, which is very close to 30,100 points. And now coming to the indicator that I was referring to, if you have a look at the combination of number of stocks in the Nifty and how the MACD has generated a sell signal on each of those, there are 50% or more stocks on the Nifty that have generated a sell signal on their MACD charts, at least in the last 10 days. However, this has not been a case of worry, at least in the last 5 years that we are tracking, because every time there are more than 50% stocks which have flashed a sell signal on the MACD chart, it has turned out to be a buying opportunity for the Nifty, and that is exactly where it has rebounded from. Now that could be a case for further upside for the market if you track this particular indicator and how it has behaved historically. Just to give you a sense of what the sell conditions are, the MACD line has to cross below the signal line, and the MACD and the signal line both should have positive values at least in the last 10 days. Now, we also speak to various technical analysts, and Nooresh Merani says that this is because of the slow up move that we saw in the recent past of the Nifty, at least in the last 15 days, where most of these 15 closes were in the positive territory. Also, he believes that the indicators look at the relative moves, and another indicator that he tracks, the relative strength index, that also dropped from 80 plus levels to below 60 levels. So this is par for the course, and we could be stabilizing around current levels or even moving higher. Also, he explains that the slow up move that has happened in the market, that has been based on narrower number of stocks, as we have seen sectoral rotation, and once again we are seeing that buying has emerged for the large cap stocks or the safe havens, indicating that there is more appetite for the large cap stocks than the mid or the small cap ones.